I've been impressed with the urgency of doing. Knowing is not enough. We must apply. Being willing is not enough. We must do. Leonardo da Vinci. And he was definitely a doer. My friends, in our art, doing is 10 to 15 minutes each and every day tracking these price movements. The only thing we care about is being able to accurately track price movement. And we do that by learning how to use these charts. And let's talk about where we are today. The S&P 500, NASDAQ 100 are down along with Bitcoin. Gold and bonds are up a little bit. Now, you look at this chart and you can see that we have already been successful and pulled half our trade after we hit our profit point at 1.62% return, letting the rest of it ride. For those of you interested in how we do that, I'll show you very quickly. It's quite easy how to do it. You go over here to your prediction and measurement tool. Since this is a short position going down, you use the short position. That pops up this little box right here. And in order to set this box up to do my experiments for you on these practice trades is I go to Friday afternoon. I pick the worst point, which would be the highest point on Friday afternoon. If you look up here to the left, when I line up the box here, you can see that it's $446.23. If you bought the worst entry position on Friday afternoon, that's the most you would have paid. Then I go ahead and set my profit band and my loss band at 1 ATR. Now for the ATR, you find that right over here. This number that's going to pop up when I line things up back over to the right. Keep an eye on that. Okay, I've lined it up. What does it say? It says $7.23. It was the number right there, $7.23. So let me show you. Now, I click the little box here, and you can see it pops up. I go to settings, and then it allows me to fill in this. I go ahead and set my account size at $10,000, one lot, risk. I just put it, I don't pay attention to that. I just set it all in US dollars. Then what I do is my entry price. That's the worst price I could buy that afternoon, $446.23. Then $7.23. They call these ticks. So basically, you know, $7.23 is 723. $10.23 would be 1023, okay? So that is the average true range on this 2-day chart right over here. That's what I put in. What is the average true range? It's just what it sounds like. It's where the stock or ETF is ranging over the prior 14 periods. We know that because this is ATR 14. I like to keep it at 14. And again, that gives us some ideas to the volatility so that we can hope to be able to catch the move. So I set the profit at 1 ATR. I also set my stop, my loss band at 1 ATR. I'm willing to lose that percent to jump in to hopefully gain that percent. Now, here's how I make up for this sort of one-to-one risk to reward ratio is that I only sell half the trade. So if I put $10,000 into the trade, I sell $5,000 and take 1.62% off the table and let the rest ride. How does that work? Well, we can go back in time and look. Here was one we initiated back on the 9th of January. We clocked out of that when we hit it actually on the 30th of January at 2.88% profit. We then had things move over and start to go down. We sold that when it just broke even and got out. We then turned right around and jumped into the down move, and we rode that down 2.63%. We then waited, and of course, it locked us out. So we made half of our money. We made profit on half our money, and then we basically closed it when it broke even. Then what happened here? Now again, why are we doing this? We're doing this because we want to catch a long run that might give us 2 ATR, 3 ATR, who knows? Well, we saw that who knows when we had things rotate over back On the week beginning the 20th of March, we made 2.70% within a week. We then sold half the trade, let the rest of it ride. And instead of breaking even on the other half, look what happened. Things just took off and shot up 12%, more than 12%. And then topped out and started to roll over again. And that's where we captured that 1.62%. So you can do the math on that. Making 2.88% on half your trade, breaking even on the other, 2.63% on half, 2.70% on half, and then rode this up 12% on half. Again, this down trade 1.62 already. Is that okay? I think that's probably okay. And you got lots more trades that we've been doing on the Qs, that we've been doing on 20-year bonds and gold. So lots of possibilities, my friends. That's why I encourage you every day to practice trade. Now let's jump. We're going to go from that. We had Daniel, one of our Patreon members, wanting me to give a little short course on it. I figured I'd do it today for all of you. And I hope that cues you in on how we use these profit bands with this really handy little forecasting and measurement tool. It works both on the upside and on the downside when you're going up on SPY or down on SH, the inverse fund. Now, let's talk about where we are, down 0.27%. We saw things bump up yesterday, bumped up in the morning, fell off in the afternoon today, below the weekly trend line on the half day and the 2-day, still moving in the right direction. We're down 0.14% on the NASDAQ 100, which also tapped us out. Nice, and then we see how things have moved up. So again, we'll continue to keep an eye on how things are moving. What do we see on 20-year bonds? They're up some for the day. Now again, they've gone sideways and up and then down and sideways up a little bit down. They're moving up a little bit, but look at the 2-day. I mean, again, on both these, well below the weekly trend line, and we're moving down like stair steps on the weekly, already reaching a lower low this week. So we'll keep an eye on things. Volume, it's okay right now. We'll see how things continue to move. You can see how high volume was when all this started, which is good. Volume slowing down, and we'll just wait, watch, and see. Things moving in the right direction. We've already been able to get out of half the position. So again, the beautiful thing is, think about this. If you get out on half the position and then things really go against you, what happens? You just lose that profit. So worst case scenario, you're getting out where you've gone into the top of the red. If things just bounded over and flew up in a day or so, well, you still have that profit you've already taken out of half the trade to give you that protection. Worst case scenario is you get out with nothing. You're not even taking a loss. Isn't it wonderful to play with the market's money? Absolutely. You have to practice this. Have to practice this. Now let's move on to gold. Gold up a little bit for the day, 0.16%. Again, going to the third week of gold. Gold hasn't hit the knockout point yet. It's gotten awfully close, but hasn't done that. So we'll keep an eye on gold as it continues to, well, it's up a little bit for the day. You can see yesterday too, it sort of bottomed and started moving up. So we'll keep our eye on gold, see where it's going to eventually head. Lastly, we will go to Bitcoin, down for the day 1.16%, our biggest downer. And again, pulling back nicely, which is what we want to see, because we're hoping Bitcoin's going to reset so that we get a clean, crisp, easy up move to track this next time. When it invariably moves back up, like it's been doing since the beginning of the year, popping up, rolling over, popping up, rolling over, popping up, rolling over. See where it goes next. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Hope you enjoyed the training along with the review today. If you really appreciate what we do, become a Patreon member. Got even more good stuff for you. God bless.